Welcome back to Factful Finance, where we break down complex financial topics with ease and actionable insights. Today, we're diving into an essential aspect of securing your home and your loved ones: mortgage protection insurance, or MPI. Now let's get real for a moment. Imagine this: you've finally found your dream home. The excitement is palpable, new beginnings, new memories, but then the fear creeps in. What if something unexpected happens? What if you or your loved one couldn't make the mortgage payments due to illness, accident, or even job loss? It's a scary thought, but that's where MPI can step in. Before we dive into the nitty-gritty, just a quick disclaimer. Everything I'm about to share is for educational purposes only. And while we may mention some products or services, it's important to remember that this doesn't imply an endorsement. Always consult a professional when making decisions about your finances. Alright, let's talk about the cost and coverage of MPI. Two crucial factors that help you understand if this insurance is right for you. First off, how much does mortgage protection insurance actually cost? The cost of MPI varies based on several factors, including the amount of your mortgage, your age, health, and the coverage level you select. On average, you can expect to pay between $30 to $70 per month. That may not sound like much, but it adds up. For example, let's say your mortgage is $200,000. With MPI, the cost might be higher, as the insurance will be designed to cover your outstanding mortgage balance in the event of death or disability. For a mortgage of this size, you could be looking at a premium of around $50 to $150 per month. But here's the thing: MPI doesn't work like traditional life insurance. While life insurance is meant to cover a wide range of needs for your beneficiaries, MPI is specifically focused on covering your mortgage balance if you pass away or become seriously ill or disabled. It's not intended to leave a financial windfall for your family, but to ensure that they aren't saddled with your home payments after you're gone. Now let's talk coverage. What does MPI actually cover? Most policies cover two primary risks: death and disability. If you pass away, the policy will typically pay off the remaining balance of your mortgage. Let's take an example. Olivia, a 35-year-old with a mortgage of $250,000, buys an MPI policy. Unfortunately, Olivia passes away unexpectedly. If she had an MPI policy in place, the insurance would pay off that mortgage, sparing her family from the financial burden of keeping the home. For disability, MPI can cover your mortgage payments if you become temporarily or permanently unable to work due to illness or injury. However, you'll need to carefully review the terms of your policy. For example, if you have a short-term disability and cannot work for a few months, MPI could cover your mortgage payments during that period. But the exact details vary from policy to policy. Here's a quick tip. Before purchasing MPI, you want to be sure that the policy covers what you need it to. Some policies may have exclusions based on pre-existing conditions or certain types of disabilities, so reading the fine print is crucial. Now, what happens if MPI isn't the best fit for you? There are alternatives like life insurance and disability insurance that can offer more flexible coverage, and depending on your situation, these may be more cost-effective in the long run. For example, a 42-year-old with a stable job and a growing family might find a term life insurance policy that provides broader protection at a lower rate. And finally, let's tackle the question on everyone's mind: is MPI worth it? Well, that depends on your situation. If you're a first-time homebuyer or someone without significant savings or other forms of insurance, MPI can provide peace of mind, ensuring that your family won't lose their home if something were to happen to you. However, it's important to weigh MPI against the potential benefits of other insurance products. For example, a life insurance policy or disability insurance may provide more comprehensive protection for a similar or lower cost. The key takeaway here is: do your research. Understand your needs, compare your options, and choose the protection that's best for you and your loved ones. Thanks for tuning in to Factful Finance. We hope this breakdown of mortgage protection insurance gave you a clear understanding of its costs, coverage, and whether it's the right choice for you. Now, I'd love to hear from you. What's your biggest financial goal this year? Drop a comment below and let's start a conversation. If you found this video helpful, why not subscribe and click the bell so you don't miss out on more videos designed to help you make smarter financial decisions. We think you'll find our next video useful in achieving your financial goals. Until next time, keep making smart, well-informed decisions.